Hello, thanks for joining. Today we're going to focus entirely on the MPC meeting, so May's MPC meeting. The MPC, by the way, is the Monetary Policy Committee. It is the rate-setting department of the Bank of England who are tasked with setting interest rates. So we had the results and interest rates remained at 0.25%, no surprises there. Inflation forecasts were pretty much left unchanged. And growth forecasts were downgraded from 2% to 1.9% for 2017. So that will steal the headlines in itself. It's a fairly minor change of just a negative 0.1%. I think markets were mostly focused on the voting pattern. And what we mean by that is there are 9 members of the MPC who get to vote on whether or not they want to change interest rates. There are 9 voting members. Charlotte Hogg resigned recently, so there's only 8 votes this month. And what we got was no surprise at all. It was 7 voting to keep interest rates unchanged, and 1, the same as last month, Kristen Forbes, voting to increase rates by 0.25%. Markets were a little bit disappointed, and we say that because sterling dropped off by about 0.3, 0.4%, mainly because there had been a proportion of the market expecting perhaps from a little bit more of a nudge towards the committee being in favour of an interest rate increase. The comments afterwards weren't overly headline grabbing, although we did see a statement. Within the statement it said that some members of the committee would not need much upside in growth or inflation to change their stance and to start being in favour of an interest rate hike. That's our clue. That means that Bank of England is focused on growth and inflation, and if you want clues as to what the Bank of England will be doing in the upcoming meetings, focus entirely on what we see in terms of growth and what we see in terms of inflation from upcoming data. What does this mean for sterling in the coming weeks and months? It's quite clear that the Bank of England is setting aside the political uncertainty at the moment in the form of the general elections and Brexit. Within their forecast is the expectation that we will see an orderly Brexit. They might be the only ones expecting that. But what that means is that they are not anticipating any weakness as a result of the political situation, and they're focused entirely on the underlying economic data. As a result, we believe we're now a few months away from an interest rate hike, and provided we avoid a disorderly exit or any surprises in the general election, we feel this bodes very well for the pound. Thank you.